Let's dive into our first session. The topic is, can co-branded cards win the next battle for customer affinity? And for the same, I would request the moderator, Miss Deepti Sanghi, founder at Kodo, to join on the stage, please. Let's have a huge round of applause for Miss Deepti Sanghi. And now I would request the speakers, Mr. Deep Agrawal, Head of Payments at PhonePe. Let's have a huge round of applause. Mr. Mayank Jain, Director Credit Products, International and Emerging Markets at Amazon Pay. Let's have a huge round of applause for him. And Dr. Raj P. Narayanam, Founder and Executive Chairman at Zaggle Prepaid Ocean Services Limited. I would request Ms. Deepti Sanghi to kindly begin the session.
Thank you. Good morning, everybody. So today we are talking about the humble credit card that sits in your pocket quietly but competes fiercely for your loyalty. To unpack this, we've got Deep, Head of Payments at PhonePe, who's helping over 600 million Indians move their money smarter. And Mayank from Amazon Pay, behind one of India's most successful co-brand credit cards. And Raj, the founder and executive chairman of Zaggle, who offers a range of cards for many businesses in India for a range of users for corporate employees.
Thank you.
And that's an introduction of the speakers, but let's figure out what's the audience like over here. So before we dive in, a quick show of hands. How many of you use at least one co-branded credit card? Okay, that's about half the audience. And how many of you have more than two co-branded credit cards? Okay, that's almost all of them. And three?
Sorry, Deepti, if I may interrupt, how many of you have an Amazon Pay co-brand card? That's it.
All right.
I'll not ask that question because I've just launched the co-branded credit card.
Well, I guess the audience here is very demanding, and they have multiple co-branded credit cards. So, well, the work is cut out for you guys to make sure they use only yours. All right, so we've seen a wave of co-branded credit cards in the past. My favorite were the airline credit cards when there were more than 3 airlines in the country. And this time, the energy feels different. There are a lot of new use cases, new users, new motivations. So let's figure out what's driving this. To set the stage, let's look at what are the numbers speaking of, like, what does the numbers tell us of where India stands and how big is the opportunity compared to other markets. So, Raj, would you like to share something on that?
Yeah. So if you look at the overall number of credit cards issued last year and year before, 23-24, so about 2.5 crores was in 23. About 2.16 crores in 24, so there has been a little bit of decline. And average, though there are no stated numbers per se in terms of how many of them are co-branded cards, but a typical good estimate would be about 12 to 14%, and it is growing at a very rapid pace. So that 12 to 14% is the number, but if you look at the overall growth, it's at about 24% last year in terms of co-brand. Ideally speaking, we should be at 50-50. That would really make credit card a very useful instrument in terms of either rewards, cashback, engagement, etc.
That's great. And actually, I think we saw a little bit of that. We have about 50% of the audience using co-branded credit cards here. But this is obviously, the most people who understand this space the most. So, Mayank, Amazon played a big role in making credit cards mainstream for online shoppers. So what do the numbers look like for you, and what factors unlocked this massive growth?
First of all, thanks for having me. And I was really happy to see a lot of hands that were raised. Amazon Pay, ICICI Bank co-brand card has really been, it's been a privilege to work on that program. It has really been a trailblazer in many ways. So if you ask me how many cards we have, I can't share the latest and latest, but last year we announced when we reached the 50 lakh milestone. That was the first and only card that reached that milestone, and within first 6 years. So, and it continues to grow at a very fast clip. When you ask me what is leading to the surge of co-brand cards and why do they work, I think co-brand card is a great invention which brings the best of both worlds together, right? The brands that are serving the customers understand the customer needs very well, customers are very engaged with them, and the banks who are really good at managing risk, fraud management, making the instruments ubiquitous, and offering capital for this. So co-brand card is a unique combination where you bring the best of both worlds. And if you can really stitch together a great partnership, and we have been really lucky to have a great partner in ICICI Bank, then that's what makes the magic happen. Also, one unique thing about co-brand cards is that not only is it combining the strengths of the two systems, banking and merchants, but it's also offering what customer needs at the moment of need, at the moment of truth. You don't have to go around first, get a credit card and then shop, or you don't have to first shop and then figure out how will I get rewards. At the moment of need, if you're able to give that value to the customer, that's what makes the magic happen.
Great. And Deep, you said you just launched your co-brand cards. Why now? What's the traction for now?
So I'll actually take a bit of a step back on that one. I think Raj mentioned that there are about what, maybe 5 crore people in India, approximately, various estimates, it's not official figures, who have credit cards in the country. And that's less than 5% penetration. That's not really been able to scale up in comparison to a lot of other developing economies or developed economies, largely because we got into the journey of credit history bureau much later, right? It started about 20 odd years back for us. The second thing is that about 3 years back, in fact at GFF, RuPay credit card was allowed to be linked on UPI. Now for us, this presented an interesting opportunity. Ability to provide credit at scale to consumers who can then link and use it on the PhonePe app very, very seamlessly across millions of merchants all over the country. So I think it was just that opportunity which we thought we felt responsible towards contributing.
Amazing. So we have 5 crore card users, 50 crore users on PhonePe.
I mean, the registered users are 60 crore plus.
60 crores plus, yes. So there's a lot of room there, and the perfect timing. Well, the wave's rising, so now shifting lens to the customers, what's really winning their hearts? What is it that makes them choose and actually use these co-brand cards? So Mayank, given your success with highest activations and spends in the industry, what's the secret sauce?
Sure. See, when we started out designing this card proposition, I think we first looked at what are the core fundamental problems the customers are facing, especially when they are using and applying for credit cards. Like, it's a very cumbersome application process. Very few people get the card. If 100 people apply, in single digits, in low single digit number of customers actually get the card. We know less than 5% of our Indian population has a credit card today. And despite all the growth that has happened in the last few years, that continues to be the expansion of credit and access to credit continues to be a problem. Not only is the application and approval a problem, if you see, you actually need a scientific calculator to figure out how to earn and how to burn, right? This will require 2x points. For 5 days, it will be 10x. On Sunday, however, it will be half. So, and then how do you use those? Like, most of the card points that are earned by the customers actually are never being able to use. Or the process to use them is super cumbersome. So that's the second big problem, right? And then the third, just the inherent friction, right? People have a little bit of a fear that I'm getting into a credit card relationship. We have heard there are high fees. It's not very transparent. It can be very problematic. So we looked at these 3-4 fundamental problems that the customers were facing. And then we actually really just went about attacking each of it, right? I think Amazon Pay ICICI Bank credit card was the first card that started inline issuance. So you are on the product page, you are on Amazon, you're shopping. You look at, let's say, a bottle of water, a smartwatch, anything that you want to buy, on the detail page itself, you'll get an offer, you will see that you can apply and you can get the card in 60 seconds, right? Even if you miss it there, you go to the cart, you enter the payment checkout page. Again, within 30 to 60 seconds, you can actually get the card. You can pay for that transaction with that card. You can save the money and the rewards on that card, and you can check out. So I think that was one. Theme being customer experience, right? The cumbersome experience of a long form to be filled, an application to be filled, to be given to the bank, to be approved, and then the card being sent to your home, and then you use it. Imagine from that world, you are able to use it there and then, right? So customer experience is the first thing that has really played a big part. And customer experience not just in onboarding, then let's say in earn and burn. So the point I spoke about, the scientific calculator that you need, I think Amazon Pay card was the first card that simplified that completely. It's very simple. You get what you see. Every transaction you earn a reward, and you can use it for multiple things very seamlessly. On Amazon, off Amazon, anywhere. So that made the next kind of magic happen for the customers. And I'm happy to see a lot of people have adopted that philosophy. A lot of banks have made their systems, in a way that you can now do digital issuance. There were a few other things, right? We were the first ones to do video KYC at scale. When COVID hit, more than 50% of the industry's video KYC were happening for this card alone, right? So those are the kind of customer experience, initiatives. And I'm necessarily not talking about the CVP. Of course, the CVP has played a lot of part. Like, if you walk on the floor, a lot of people will first feel, oh, the unlimited 5%, that was unheard of. And people had their opinion, that's not going to work, it's going to fail. As you all know, we are very happy to, we have just very happily announced the extension of our partnership with our issuing partner for another 7 years. So the CVP was definitely great. But over the years, if one thing I've learned is CVP, a great CVP still doesn't work if the customer experience is not good. So a seamless experience on onboarding, on usage. And on CVP, again, one thing, and I know a lot of fintech founders are here and a lot of people are launching these cards. One thing that you would have seen with many cards is you start with a big bang, a lot of rewards, very high, earning, but then they keep getting diluted. Every month there will be a dilution, this dilution, spend cap, this and that. At least one thing that we have tried to earn customers' trust, because ultimately trust is the bedrock. Like, your customer should not feel that, okay, I'm going to be taken for a ride. So we have tried to not only maintain what we promised, but constantly we have worked hard with our issuing partner to find ways to enrich the proposition. So if you see, while 5% on shopping unlimited was and continues to be actually a very unique proposition in terms of how unlimited the rewards are for a no-fee card, we have also extended them to travel now. So now you can book flights, book hotels, and you still get the unlimited 5%, right? We are taking, and all this comes together, the CVP, the CX, the trust. Ultimately, what needs to happen for any co-brand card to succeed is that the customer need to make it a habit to use that card. A lot of co-brand cards where they fail is that that card becomes it stays in your drawer. You take it out for the shopping on that particular merchant, and after that it goes back to the drawer.
Deep, let me ask you one question there, Deep, if you don't mind. So do you think, with this, you could actually have a zero-limit credit card, but with a lot of rewards built in? Is that possible? Do you think, is that a way to, progress in future, especially looking at India? US, you have the average is 10 cards per person. Okay, that's US. And India, where India is. So would that be a innovation?
Yes. See, Raj, I think that's a very, very good pertinent point. What I was saying, the first problem for us was how to democratize the access to these credit cards. Today, we just announced our report 2 days ago, how India pays. Yep. We see 65% plus Gen Z customers applying for a credit card or wanting to apply for a credit card. We see more than 70% of affluent women. They want to shop. Their preferred payment method is a co-brand credit card or a credit card which can reward them, because they are very savings oriented. They want to, they want to feel smart about their every shopping. So I think, Raj, to answer your question, it's not just the zero fee or the CVP. I think the first is to make it seamless, as we were discussing. How do you make it so simple to get the card, right?
Yep.
3 clicks, 60 seconds, many things, quick KYC. How do you make it frictionless? And how do you make it simple, clean and transparent,
Yep.
so that you don't have to do a lot of maths and gymnastics to figure out how will I earn and how will I earn. I think that starts happening, and it's already started happening, is what is going to, I think, expand this
Expand the
market.
market. Okay, great.
Well, I'm going and applying for it right after this. All right. Deep, how do you see customer affinity building differently in a payments ecosystem where frequency of use is so much higher? And how do you translate that app engagement into card loyalty?
So I think a lot of building blocks are what Mayank already mentioned, right? Right experience, seamless application, linkage, and usage process, right? But what tops it all is the right customer value proposition, more popularly known as the CVP in the credit cards world. What we did when we wanted to launch our credit card was, along with both our banking partners, was to look at the consumer behavior on PhonePe. What it meant was, of X number of transactions, if a very high percentage of transactions are done on, say, scan and pay on UPI, we said that should be made more rewarding for consumers to use. So we came up with a reward for every scan and pay transaction using the co-brand credit card. That's a volume use case in a country like India. The other one was utility bill payments and recharges. That's again a regular use case which consumers engage with us on. And on a monthly basis, we see consumers making all kinds of utility bill payments, whether it be electricity, gas, mobile, etc. What we also did was we said, we are giving an X, say 1% on UPI scan and pay based transactions, but we are actually giving 10% on recharge and bill payments. And to top that, we also have a travel category on the PhonePe app. We give 10% there. So it's a very nicely coupled value proposition for the consumer. The consumers are also shopping online significantly. We're seeing a lot of trends where even in tier 2, 3, 4 and beyond, we're seeing a lot of online shopping happening from platforms like Amazon. And what we did was we incentivized the consumers to start using our co-brand card with a 5% back there. So in terms of CVP, we tried to tailor it to what the consumer typically uses it for. And that actually drives the app engagement for us automatically. It does not need any specific nudge or lever. We see broadly about 2x the engagement, linkage, and transactions of our co-brand card versus any other card issued by any other player.
That's incredible. Now I'm confused. I need to apply for your card as well. Okay. Raj, from the
Deepti,
issues...
you have to be careful, because this can impact your credit score.
Damn, yeah, maybe after a few months, yeah. Good point. Thanks for that. All right, Raj, from the issuer side, what role do networks and reward structures play in keeping customers active? And in your world, are you seeing there's a move from cashback towards more workflows and lifestyle-based value that you offer?
Oh, that's a great question, Deepti. So I have 3-4 takes there. Like Zaggle is going to launch, our co-branded card very soon, should be in market. We are moving away from a concept called mass customization to hyper-personalization, okay, which is, see, I will use a card which suits my lifestyle. I don't want a card, which doesn't suit my lifestyle, okay? Generally, what happens is credit card for them, this is the segment, okay, so scores above 720, blah, 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 give them this card. And, they do not really build in rewards or kind of engagement with the card holder, which would make sense to them. So it's like, okay, these are the rewards, whichever you want to take, go ahead and take, okay? So I am an avid golfer. I would love to have, golf privileges on my card, okay? Mayank, let's say, is like a great football fan for that matter. So he would want, if there is an engagement where he can go in, watch those FIFA World Cup, other things, those English Premier Leagues, etc. So that hyper personalization is missing in India today. Okay, and cards are form of more credit, less engagement. If you really ask me, right, it is networks, who should really run the reward programs and not the banks. Okay, that's my belief. Because if networks do it, I can aggregate across 10 banks, the same network, let's say, then I am, collating all those points together and I will be able to utilize my rewards in a better fashion. But what happens today is that you have a, ICICI Bank, you have a Access, Kotak, etc. And, each of these, you're earning X amount of points, but that's not helping. That's really not helping, and it should be the networks which should come into play. RuPay, MasterCard, Visa, all three of them should really push this very, very hard. And with our card, you will see which is going to get launched soon, is like this hyper personalization concept is tuned to an individual who is using the card. Okay, and it is a very iterative process. We are looking at the spends and then converting that spends and giving him extra, 2x, 3x, 4x reward points where they are using it. Okay, so you give a, so generally what happens is you go to, brands, they will tell you, get me X amount of business. Okay, and now, Deepti doesn't like to shop there. Even if I give you 3x, 4x, 5x, what use is it? Okay. And that concept in India has to come in, and I think Zaggle is at the forefront. We released about, 50 million prepaid cards till now, and we would intend to do the same, with Zaggle, with multiple co-brand partners.
Amazing perspective. So we are making...
I would just like to add that we have our friends, at least from the RuPay team here. I really plus one the fact that the networks also should give the rewards, not only the brands and the issuers.
All right, so we've got our work cut out for ourselves. Now, talking about the networks, banks, and brands, let's talk about the construct and how these partnerships really work. So it's a good segue into that.
Typically, if you look at, there is cost. So there is cost and revenue side, right? So cost of acquisition is typically on the co-brand partner. Okay, so let's say if I have, Zaggle is the co-brand partner, we will have to bear the cost of acquisition. And then, the revenue share is there, which is, in terms of your interchange, you would get an X percentage, from the earnings revenue side. And then you have other costs, cost of capital, etc., all, which the bank takes. And the issuer side, so the credit risk is solely on the bank. Okay, so except SBI cards and BOB cards, there is no other NBFC which is allowed, today to do that. And, one of the things which you will really, if you go deeper, you will realize that some of the banks like Canara Bank has a very, very low cost of credit. They are at 4.5 versus some of the other banks who are at 6.5. So those 200 basis points is a large play. But, are they utilizing this 4.5% cost of credit to go out in the market and tom-tomming that fact that we'll give the co-brand partner a better percentage? Okay, so that's not happening. And, this is somewhere PSUs and, networks can play a very, very big role in pushing the PSUs, who have a lower cost of capital, okay? And bring that opportunity back to the co-brand partners who will bring it to the individual users. So that is a very, very big piece is what I think.
That's amazing. I think it's a very good summary of how the economics works for everybody. Deep, from a payment platforms lens, what do banks, fintechs, and networks each gain from these programs?
I think, so for the banks, I think it's fairly straightforward. It basically allows them to drive penetration way deeper where, and at a cost, in a cost-effective manner, with maybe digital KYC, like Mayank was talking about, and that really helps them significantly. Essentially acquiring customers and servicing them, right, with these partnerships. For networks, it basically helps them drive the spends in the right direction. For example, say RuPay isn't. Yeah. RuPay is a new entrant in the credit card space. It's just been around for a couple of years. And they are essentially utilizing this to drive a lot of issuances and spends on the RuPay CC on UPI platform. Whereas if you compare that with, say, a Visa or a Master, who've been around for many years, they are trying to actually move up the value chain and target spends like international travel or maybe a lot more online spends, because a lot of commerce is also moving from offline to online. So for networks, it's basically about shaping consumer behavior by giving the right sort of value proposition. Uh, for fintechs or payment players like us, it basically, or any commerce player for that matter, it is either of the two or a mix of two, customer acquisition and retention or engagement. And depending on the type of stage at which you are in terms of your org evolution, the mix could change, right? Say, for example, for Amazon, it could be a lot more about retaining customers, driving engagement so that they shop more on Amazon. But for some platforms, it could be about just utilizing this as an acquisition mechanism and driving some other business with that, right? It's a combination of all of these.
At the end of the day, that's the topic of this panel, right?
Yeah.
These cards gain affinity. They get affinity for the bank, for the network, and for the brand, right? Basically, and it was very interesting the way this topic was, structured. Will we win the battle for the affinity? I don't know whether co-brands will win the battle for affinity, but they are definitely the most modern weapons to fight this battle, right? Because if you see, even like we have the privilege at Amazon to have, I think, the best loyalty program in the country in terms of Amazon Prime. Once the customer, we call these high-value actions. Once a customer, let's say, downloads an Amazon app, that's a high-value action because then they will start shopping with us. Once somebody signs up for Prime, that's another high-value action that they will start shopping more with us. And once they sign up for our co-brand, that becomes one of the highest value actions because those customers then don't want to go anywhere. So this is a battle of getting the customer preference, right? And this is a way for the brands, the banks, and the networks to show to the customers that we value you and we value this relationship and we want to deepen this relationship. That's all this is about, right? Those customers probably would still shop at Amazon, but with this offering, they feel valued. They feel that Amazon has come together to offer us extra value, and that partnership and that relationship strengthens.
Great, thanks for that. So clearly a win-win proposition for everybody here. So why aren't we seeing a much stronger growth or even more co-brand cards that are there? And there has been some history where we have seen some programs have been paused or slowed down. So what's getting in the way of these next wave of co-brand cards? So maybe Raj, we can start with you.
Yeah. So, see, there is a thing called utilization and then there is misutilization. Okay, so what typically as India is a very regulated market, and when you flip regulations to your discretion, there is where the problem happens. Okay, and what we have seen is some of those cases which we saw, where a couple of co-brand partners were banned, and that created a kind of a not a very clear picture was, being presented, and some of the bad actors, really played, the real baddies. But in my opinion, now we are seeing a change in the way the banks are approaching it. India is a credit-starved society. Huge potential. Co-brand brings in affinity, brings in, they are closer to the customer, they understand the customer better. Now, what should really happen is that, regulation is great, but not at the cost of innovation. Okay, innovation with regulation is fantastic, is a beautiful concept, and what I think over a period of time, in next 5 years of, let's say India's journey and the growth to about, let's say 5.5 trillion, over next 5, 7, 8 years, one thing which is going to stand out is the growth of credit cards and the rate at which the younger generation will adopt to the credit cards. And what will happen is that unless and until you do co-brands, it's very difficult for a bank to, to improvise on their offerings constantly and consistently. So in my opinion, deregulation, a little bit of deregulation actually should happen on the credit card side. And similarly, like as the concept says in US or, Middle East or some of the other countries, what they should also allow some of the large NBFCs, etc., to also open up the place. Okay, that would bring in healthy competition. With that healthy competition would bring in, in terms of people going and reaching out to the credit cards and wanting more than 2, 3, 4, depending on what their choice and need is, and build in the hyper personalization to, it. I think we have an absolute clear winner on hands.
Totally agree on everything over there. Deep, from your lens, how do you see your bank partners are balancing customer acquisition goals and their credit environment? Has the tightening of portfolios changed anything for you?
I mean, we've just started a couple of months back, what we've seen is that for the right kind of customer, the banks are absolutely happy underwriting and giving out a credit card. What we're also seeing is they're relying a lot more on the signals from partner platforms. I'll give you an example, right? Think of a consumer who is making an electricity bill payment on a consistent monthly basis of say 2,000 rupees every month. Electricity bill is actually a postpaid bill, right? You're actually getting the ability to use electricity for a bill you'll pay a month later maybe. And if you're showing good consistent behavior there, that gives banks a lot of confidence to underwrite these kind of customers. So all of these data points in partnership with banks are actually really helping them get that confidence. Second, what we're seeing is again, a proliferation of a product which has been around for many years, which is an FD-backed secured credit card. And that's the one a lot of banks are now trying to utilize to acquire new-to-credit customers. This basically allows consumers to use their FD as a security against a credit card, get credit period of course, get interest on their FD, and build the credit history, which will then allow them to get an unsecured credit card much later. So it's a combination of these two, which is working out well. I think, like as Raj mentioned, this is an evolving cycle. There are cycles which are extremely aggressive in terms of customer acquisition, and there are some cycles which require you to be a little more watchful, and for all the right reasons.
Great, amazing points.
Just to add to what he said, so look at this, in our co-brand credit card, what we are listing as a clean feature, okay, and it's, maybe 1 out of 10,000 or 20,000, 30,000 will win, is the ability to hire a private jet, okay. So that's one of the things. Now what happens is, what it will do is, a lot of aspirational folks who would want to come in and, want to utilize, come into the card, understand, it gives us an opportunity, to tailor the card according to their needs. And that is what, hyper-personalization is, So, sometimes you will have to do things which you normally wouldn't do to be able to, get in more and more cards and, networks also to look at you and say, oh, wow, this is a great feature. So those kind of innovation has to be like a lot more than what it is today. And today it is more about cashbacks. It has to move away from cashbacks to a system of engagement, and engagement which is deep and touching.
Great. Great. Actually, I was going to talk about the innovation that's coming up. So great points on innovating in a hyper-personalized way and using alternative data on your platform to underwrite and expand the credit card base. Um, you know, Raji mentioned that how can we enable PSUs with lower cost of capital to actually launch credit cards successfully. We're hearing a lot about cards as a service startups who are helping brands and bridging the tech gap between brands and banks to launch their cards via APIs. So any views on that and how will that change the pace of innovation?
In fact, I should ask the audience here, anybody has, attached their credit card to UPI? Yeah. So there are like, quite a few, but many more could. So think about this, if the credit on UPI is an enabled feature and, you typically today use UPI for small ticket purchases and don't do it for large ticket purchases. Now what happens is, cards as a service, when some of these partners bring that service, they can bring lot of layers of innovation into the whole program. So what is today? Today you go, you integrate, your TPAP comes and then you integrate that, you have to go to another partner. So, why don't we have like a, let's say, a API partner who's a standard API partner? Okay, and it's not like multiple standard API partners, but could be one partner, which is easy to hook. Today integration takes about, 2, 3, 4 weeks to about 10, 12, 14 weeks, depending on, the other side's readiness, which should ideally happen in less than 30 minutes. And, banks, cards as a service, some of these operators who do that, could actually bring all of this. And you could have multi-connectors talking to, multiple hooks.
Yeah, like these hooks connecting multiple banks with multiple new brand partners and really accelerating that growth. Mayank, globally we are seeing AI-driven loyalty and dynamic rewards. How might that play out in India?
I think Gen AI is the
We can't have a session without AI.
I think we used to call this a mega trend, right? It's a mega trend. We cannot escape it, and we don't want to escape it. We should embrace it. The three key pillars that I spoke to you about, like what we believe are the fundamental problems for the customers and what has led to a successful program for us. Let's look at each of them, right? One is just the onboarding experience, right? And the low approval rates. Now with Gen AI, especially let's say programs like Kodo, right? You are the spend analyzer. Today there is no need for with the account aggregator, the whole foundation of digital payments that we have in our country. There is no reason that these approval rates cannot start touching 100%. Hyper-personalization, not just in rewards, but hyper-personalization is in the card or the credit line that you get, or the kind of credit card that you get. So that is one. Approval rates, etc., could improve. Second, I think one of the key things that we see is some of the applications, a lot of data has to be provided by customers. You have to offer your PAN card, your salary, workplace, and then multiple details. And we often see customers drop off middle of the application, right? And then somebody has to call you, it's an inconvenient time, it doesn't work. With Gen AI, right, you are on your screen, you are filling it. And if you are stuck somewhere, the AI can tell you where to look for this information or what information to fill, right? You have seen that, on shopping on Rufus. When you go and you tell Rufus, I want to give a gift to a 12-year boy, what should it be? It'll not just be a car, it'll come up with a lot of things that could be based on your purchase history. So Gen AI will make the onboarding process seamless. It'll make, as Raj was talking about, rewards hyper-personalized. Basically, it will be decided by the machines and the AI as to what is the best payment instrument and the payment method for you, right? So it can see what all spends you are doing. And I think the proposition of the cards will move from this category this much, that category this much, to saying we will offer the customers who are giving us the highest share of their wallet, the highest rewards. Because ultimately, this battle of affinity is a battle of the wallet. If I'm spending my dollars in multiple places, and if my co-brand card can help me channel them in places where I want, then I'll offer customers more value to drive their share of wallet to us. So I think a lot of innovations to happen in making the process seamless, in making the approvals better, and even making the earning and burning of the rewards, which drives affinity better.
And you attach, something called PFM, which none of the credit card companies are doing. A personal finance manager, which is already which would actually go ahead and predict that this is what is your spend going to be next month. Okay, that would really be, you will try your wits end to make sure that you beat that AI prediction. And that is in one way, a little bit of gamification which happens. So personal finance manager telling me exactly where am I, how am I, and in terms of, devolvement. Okay, so the lesser the devolvement, more credit will flow into the market. And PFM plays a very big role in that.
Great. So on that note, let's do a quick rapid fire round. So if you agree with it, then swipe. And if you disagree with the statement, then decline. All right? So we'll go with Deep, Mayank, Raj in that order. Cashback beats reward points.
Swipe.
Swipe.
Yes, absolutely swipe.
Okay. UPI credit will eat entry-level credit cards.
Swipe.
Swipe.
Yeah, swipe.
Okay.
You to make it tougher.
Controversial. Okay. AI will decide which card we use for each purchase.
This is a tough one. Swipe.
Okay.
I say decline because there won't be multiple cards.
Absolute decline.
Okay.
Yeah.
Good one. The next viral co-brand will come from a brand that does not exist today.
I would hope that it's our brand. So decline.
Has to be declined. My India CEO is sitting there, so I cannot say anything else.
Absolutely a decline.
Great. And plastic cards will be gone in 5 years.
Yes. Swipe.
Swipe.
I would say decline.
You think metal cards will replace them?
Of course, metal would be nice, but some or the other form factor would be there. And plastic, we've been talking about for ages that plastic is gone, but not going to go anywhere.
Great. And I think right on time with that. Thank you, Deep, Mayank, and Raj for this rich discussion. And thank you all for joining us.
Thank you so much. And yes, absolutely on time. Let's have a huge round of applause, everybody, for them.